Here's the thing, Leo was doing everything right in his business, but he wasn't playing the bank's game. We stepped in and gave the banks exactly what they wanted to see. 10K on paper. Here's the game plan we used to make that happen. Let's be real. When it comes to credit, it's all about perception. The big question is, do you look good on paper? Because that's all lenders care about. Lenders don't care about how hard you hustle, your struggles, or your potential. They only care about one thing, the data. It's not who you are, it's how you show up on paper. In this video, I'll show you how to make the bank see $10,000 on paper and turn that into $100,000 in business funding. Let's get into it. Hey guys, welcome to the channel. If you're new here, my name is London. I'm a small business owner just like you. A few years ago, I learned how to tap into over $250,000 of the bank's money with a brand new LLC. No fancy credentials, just smart strategies. I'm not a financial advisor, but I've been where you are. And now I'm here to walk you through exactly what I did step by step so you can do it too. Whether you're starting, growing, or scaling your business, this is the place to be. Let's get into it. Let me tell you about a client of mine. Let's call him Leo. Leo is one of the hardest workers I ever met. He built his business from scratch, grinding day in and day out. But when Leo walked into that bank to apply for funding, they didn't care how hard he hustled. They didn't ask about his vision or how many sleepless nights he spent building his dream. They only cared about what showed up on paper. And here's the thing, Leo had a decent personal credit score of 715, but his credit profile was thin. And on top of that, his bank account didn't reflect the cash flow he was managing. Even though his business was doing okay, the bank saw high risk. So they denied his business credit application. Not because he wasn't capable, but because his credit profile didn't match their expectations. Here's the thing, Leo was doing everything right in his business, but he wasn't playing the bank's game. We stepped in and gave the banks exactly what they wanted to see. 10K on paper. Here's the game plan we used to make that happen. But before we dive in, let's make this a win-win situation. Hit that like button and subscribe if you haven't already. Not only does it support me in creating more content like this, but it also ensures you never miss out on tips that can help you level up your credit game. Now, even with Leo having a strong 700 plus credit score, he didn't meet the minimum credit limit banks look for to approve funding. Here's something most people don't realize. Banks use something that's called comparable credit. This means they want you to already managing a credit limit similar to what you are asking for. For example, having at least one personal credit card between $5,000 to $10,000 credit limit and keeping that credit utilization low shows the banks you can handle larger debt responsibly. Without this, lenders might see you as a high risk no matter how good your credit score is. That's why building those high limits and maintaining a low balance is key to unlocking serious funding. Here's a warning. Stay away from subprime lenders when building your credit. These types of credit card can seriously hold you back. Subprime lenders like Credit One, First Premier Bank, Indigo, and Surge offering lure people in with approvals for low credit scores, but they come with a catch. Most of them will cap your credit limit at $1,000 no matter how responsible you are. Low limits won't help you qualify for serious funding. If you want to show a $10,000 credit limit, here are two better strategies you can use. Number one, request a credit limit increase. If you've been using a credit card responsibly, many prime lenders will consider increasing your limit significantly. Number two, add an authorized user. Join someone else's account with a high limit and good payment history. This boosts your credit profile without waiting for years to build it up yourself. By avoiding subprime lenders' credit cards and focusing on building high limits, you will be in a much stronger position to qualify for funding, for real business funding. The next thing we did was get $10,000 into his business checking account. because he was missing something big: bank credit. Bank credit is entirely separate from building business credit, and it plays a key role when lenders evaluate your ability to repay loans. A major component of bank credit is your bank rating number, which essentially measures how well you manage your cash flow. Here's how it works. Your bank rating number is determined by the average minimum balance you maintain in your business checking account over a 3-month period. Lenders use this number as a snapshot of your business financial health. Here's a quick breakdown. $10,000 or more, you get a low 5 rating, ideal for funding approvals. And between $5,000 and $9,999, you would get a mid-4 rating, acceptable but not optimal. And between $1,000 and $4,999, you would get a high 3 rating, insufficient for many lenders. To qualify for a serious business funding, you need to maintain at least a low 5 rating for 90 days. Without this, most lenders will assume your business lacked the cash flow to handle repayments. To make sure his account showed the $10,000 needed, we used one of his unsecured business credit card with 0% interest for 12 months. We pulled the cash off the card and dropped it into his business checking account. Here's the cool part. His minimum payment was only $110 a month for the next 3 months. This kept his costs low while showing the banks exactly what they wanted to see: strong cash flow. This move bumped his bank rating number up to a low 5, which what most lenders look for. By keeping that $10,000 balance in his account for a few months, it made his business look more stable and trustworthy on paper. Once Leo's credit profile and bank rating was solid, we put the credit card stacking method to work. We hit up multiple banks round after round, and by the time we were done, Leo walked away with over $100,000 in business funding. See, this wasn't just a quick win. It set him up for the long haul. Now he got the cash he needs to grow his business and the foundation to keep getting more funding whenever he needs it. See, it's all about playing the game the right way. Want to learn how to liquidate your credit cards the right way? Check out this video next.